So, as I was saying, very good afternoon. This is our weekend session, Saturday, 13th of May. First, let's quickly take a look at the global markets, how the US markets played out, and where is SGX, where did SGX close. We'll take a look at the Nifty, then the sectoral indices. We'll take a look at ratio charts today, special edition, while analyzing the sectoral indices. Then we will update our cash market live open positions and trail the stop losses or decide what action we should take next week. We'll scan the Nifty 200 for fresh opportunities next week. And finally, we'll take up your doubts and questions. So one by one, US markets closed mildly negative. It is completely staying within this tight range, and the tight range is within a wider range. So essentially the right word will be range bound price activity, during which the momentum has completely eased off. It has created a couple of well-defined supports for itself, multiple tests, a breakout failure on the upside recent, 50-60% of the retracement, and an important question now: what will happen going forward? From a short-term point of view, this one and this one are the triggers for the downside. From on the upside, it needs to take out 4150, 4160. This is S&P 500, and then probably scale back up higher levels. The fact that the momentum is slowing down is the only concern, but the underlying trend is fairly strong, and important to see whether it manages to hold on to these highs or not. Now, SGX has closed around 67 points negative at 18,250. All right, and it looks like the rising wedge kind of a behavior that we had drawn might be just early signs of might be opening up on the downside. Added the ratio charts to our sectoral indices. This will give us a slightly broader perspective to understand how the sectors are playing out. Coming to our Nifty, we closed at 18,314. Friday's price action was opening low, slipping down, and then throughout the day straight bouncing back really nice, which has kind of created a range bound activity for itself. Again, we clearly experienced intraday choppiness, breakout failures on the upside as well as breakdowns failed, and so it has kind of created a range bound intraday choppy range bound kind of a state for itself. Very early signs of momentum slip on the daily time frame. Weekly charts are very well established in terms of trend and momentum. I have the 76.4 and 78.6 fib. As I was mentioning yesterday evening in one of my online interactions, 18,100, 18,200 kind of levels, wherein the 61.8% retracement was there and earlier resistances were well established, actually played a more important role. The index has taken it out and has closed above it. So far so good, comfortably. Any kind of slip from here on, I think 18,100, 18,200 is the level to watch for, somewhere here in this area. Of course, the psychological 18K will play a role, but from a short-term point of view, that's the support that we should look at, 18,100, 18,200 kind of a zone. If we get at all this wedge breakdown, we'll see whether that plays out or not. Weekly charts, as I was saying, trend-wise, momentum-wise, no problem, pretty well established. It's bullish. We've had around 7 weeks of pretty strong gains. So even if it slows down a little bit or the rate of gain slows down, I think it should be fine. Worst case scenario from here on a week-on-week basis, is any slip below 18K. If let's say the index slips 300 points all of a sudden next week, sub 18K, that will be a knee-jerk kind of a reaction. But as long as I think 18K, 18,100 holds from the weekly time frame, we are bullish in the market. We need to be a little cautious because we are seeing early signs of momentum slowdown. It's created a pattern for itself, and we'll see whether this pattern actually breaks down or not. If we take a ratio chart of how Nifty with the dollar index is playing out, then over here you will find some hook setup. This is a contrarian setup which is backed by decent loss of momentum. Aikanashi is also reflecting that, which means that if this hook setup, if this contrarian setup plays out, this one over here, then this chart should be coming down. If this chart is likely to come down, which means sell Nifty, buy dollar index is the pair trade. So we might see some strength coming in from the dollar index. Short-term point of view, this is by the way a contrarian setup which might bring it close to that 17,600. This is a pair chart. This is a ratio chart. So the Nifty dollar pair chart, ratio chart, is suggesting a possible slowdown. Does that mean that we can go and find ourselves some safe place in gold? No, this is the Nifty gold chart. Now, recent bounce back has clearly gone in favor of the Nifty, and there is no such sign. There is no such sign that sell Nifty or buy gold. Over here, the ratio chart is still suggesting strength coming in, or the strength which had come is holding well in favor of Nifty. Mid and small caps, big difference playing out here. If you see the small cap, CNX small cap index, this is the ratio chart. Just give me a moment. This is better. This is the small cap index, and you can see that that's where it is trading right now, back to the levels where it was in the past of around August 21, March 22. But the mid cap is showing exceptional strength and is almost eyeing its life high. So mid caps in your portfolio should have done well. Now, mid cap with CNX 500, if you take a ratio, then, and we will focus more on the weekly charts, right? Let's focus more on the weekly here. It's holding well, not a problem. Small cap with CNX 500 is okay. The question is, if this kind of move picks up, which means that maybe the last movement can come from the small cap. Relative strength can come within the small caps. And we do tend to see, I have seen this many a times, when the market tries to top out, a lot of activity happens within the smaller section of the market. So if small cap index gives us this breakout, then probably we can find some strength coming back. You can see some strength coming back to the small cap index. Bank Nifty. Now this is an important index, so we'll quickly take a look at the weekly, daily, 75 time frame. Exceptional strength coming in from the Bank Nifty. SBI held really well. We discussed this in our yesterday's session. Almost at a life high now, and I think it will reach life high. This loss of momentum, which was during this period, could have given us an ABC, but that did not happen. The index has far more strength, or the trend strength is more relevant than the momentum shift, and so we are in a strong uptrend as of now. You would like to take a look at PSU Bank versus private banks. This is a ratio chart of PSU Bank versus private bank, and this is an interesting chart because you'll have a big red candle which is saying that sell PSU, or I would say PSU Bank relatively weaker than the private bank. Is that the case? Is it going to play out? We'll see whether we get this move or not, which will mean that PSU Bank might be slowing down going forward. Then we can look to shift towards private banks. This is the Nifty private bank, which again looks stretched, and it has given an exceptional move last week. So not too sure where do I hide if I go underweight in PSU, and should I go overweight on private banks? I'm not sure about that, but PSU Bank is definitely showing some weakness. CNX Finance will give you a very similar picture. Strong rally all-time highs, almost all-time highs, I believe, just like the Bank Nifty. Again, exceptional move coming in, completely taking care of this loss of the momentum of the index, and now showing some fresh strength. So finance, banks, Bank Nifty, unless you're a contrarian trader, doesn't make sense to look for shorting opportunities. Does it make sense to look for long opportunities? I really doubt it will land up chasing the sector. So I would suggest wait for a meaningful corrective move. Auto, exceptional strength. I think this was probably the best move from the sector after a long time. After the breakdown, it completely reversed and went up to a life high. Auto, FMCG are the few sectors which has now reached a life high. 2 legs of exceptional momentum has helped this. No signs of weakness per se, apart from the fact that it is stretched. There's nothing else that we can say about this CNX Auto Index. So would not like to chase, would like for a corrective move to get into it, low momentum setup, and do not look for shorting opportunities unless you're trading the smaller time frames like 60 minutes or 75 minutes. IT is definitely weak, stays weak. Let's take a look at the IT vis-a-vis the overall markets. And if you take a look at the weekly charts, this is the ratio chart of CNX IT on CNX 500. It's not really showing us any sign of bottoming out. Will we get a classical divergence? Will it give us a hook setup for a short-term bounce back? Nothing as of now on the cards. So IT stays weak, and we will not trade any kind of a bullish unless you're a long-term investor and looking to buy on a dip. TCS, HCL Techs are relatively better off than Infosys, but it is Infosys which will help the reversal. FMCG is very much similar to auto, exceptional strength coming back again, all-time highs. The only word we can say is stretched. If you're not a contrarian trader, do not try to short the market. You might get opportunities on a smaller time frame, but those trades have to be hit and run. Exactly like the way I played out ITC yesterday. Metals. Now let's take a look at the metals versus CNX 500. This will be an interesting comparison. This is a ratio chart of metals with CNX 500, and we can see fresh weakness coming in the metals, which means the index was weak and is weakening again. It's given us this breakdown. If now we go to the CNX metal chart and you take a look at the weekly, it's here, which means it's away from its lows. The ratio chart has broken below it. What it's telling us is, in terms of relative strength, the CNX metal is more weaker than the CNX 500. Will this weakness culminate into more downsides? We have a perfect momentum shift on the downside. We have a short-term trend reversal as well. The only caveat is the index has already fallen 4 days back from this high to this low. This is quite a meaningful fall, right? And we generally wait for counter moves to trade. So we just hope that it gives us a meaningful counter move and opens up further downside. If the market weakens, metals I think was the biggest sectoral loser recently. We might get some opportunities in stocks like Tata Steel and Hindalco. So metals, I would mark it red. FMCG, I would like to stay away from it. IT, market red. Auto, strong, want to stay away from it, don't want to chase. Same with finance and Bank Nifty, positive, but we'll wait for better dips in the market. Media, now completely range bound, isn't it? Completely stuck within this range. Is it bottoming out? The weekly chart has given us some signs of momentum shift. It's got some lows, some supports have got created, defined. Now it needs to show the strength. Momentum signaling, it's improving. Supports have got defined. So the foundation has been, laid down. Now whether the price will deliver or not, whether Z, PVR, Sun TV, etc. will move or not, that needs to be seen. In terms of relativity, if you take a look at the media versus CNX 500, nothing of that sort. There is no such signal. So in terms of relative strength, it is still very, very weak. So sadly, no such story as of now. Only if it bounces back, then a possibility. Pharma. Again, I think one of the most interesting charts, CNX Pharma first. I discussed this with you. It's a breakout failure. Breakout failure, 3 days from the highs, has turned into a momentum shift on the downside. A weekly chart after I think 6 or 7 weeks of up move is slowing down. I am not expecting a big move on the downside, but if it gives any kind of a counter move, will definitely be an opportunity. The reason that I'm not expecting a big move, any significant move on the downside, is the ratio chart over here between CNX, Pharma and 500 has essentially been improving. If you take a look at these two divergences, these peak and trough divergences, after which we have a trend reversal in the ratio. Post this is a downturn. Now, ideally, after this kind of a reading, ideally this should not come down all the way here. It should probably kind of stabilize and pick up a little bit. If it does, then it's okay. But a short-term movement in pharma on the downside, only after a bounce back is possible. Energy. Strong chart on the daily time frame. I think it has created what you know as the evening star. The weekly chart has given us a move which has come back close to these lows, which is what? Late June 22 lows. So it has at resistances. Very early sign of momentum shift. Trend has just kind of slowed down. Does it have any kind of relative strength behind it? Well, not really. If you take a look at the weekly charts, this movement and the consolidation, so I would say make or break, it can give us a move, a short-term move on the downside. The daily ratio chart is suggesting so. The daily CNX energy chart is suggesting the same thing. So we'll mark it red, but not ready. Not as weak as metals, not as weak as IT, but we may get a opportunity on the short side in this pocket, from this pocket, from this pocket. We might get a move. Real estate had a great run up and it's just slowing down a little bit. Weekly charts, again, the same word I will use, stretched, like I used for auto and FMCG. Interestingly, the momentum shift has started to happen again. Last time it happened down here, there was a bit of a move, just a single simple correction. Now that the momentum is shifting down, are we going to get a corrective move? Will that corrective move be of a double legged move? We don't know. We need to see. The information that we have is the momentum is shifting. Price is not willing to reflect that. We've got some divergences, which is an interesting sign. So one can look for contrarian opportunities here. If we take a look at the real estate 500 ratio, over here also the daily chart is clearly losing momentum. Over here it has created some range for itself. So we'll be looking for some range breakdowns. If that happens, we have some opportunity. So real estate from a topping point of view, possible. CNX PAC, this index, first let's take a look at the index first. I've added this recently, has created a breakout failure. There you go, breakout failure. Momentum has just started to shift. Very strong weekly charts, no problem there. But I think we can get an opportunity on the downside as well. So quite a few charts which are really stretched. This is the CNX PAC with the 500. Now the 500 ratio chart is suggesting an A, B and maybe a C kind of a behavior. So that holds well. Momentum on the weekly charts is down. Momentum on the index is not down. See, this is how ratio charts can help us. This is the CNX PAC weekly chart. Pretty good looking, no problem, right? The moment you take a look at the 500 with the 500 ratio chart, on the weekly time frame, we start to see a one-legged corrective move and then a little bit of bounce, during which the momentum is slowing down. So it might be getting ready to top out. So we should keep an eye open within the PSU pack for any kind of a slip. So if we sum it up, Nifty is still bullish. The bank Nifty is also fairly bullish. The finance is also, I would say, bullish, but they are stretched. Auto, FMCG, finance, banks are also a little stretched. From here on, it's important for, let's say, Reliance, ONGC, other energy stocks, IT stocks, especially this pocket. If it picks up, then that's good for the index. How long can you expect auto and FMCG to keep on supporting. The million dollar question will be the most important pocket is this. This is the most important pocket. So if this packet, if this, sorry, if this pocket comes down, then we have to really time the market. Or else if these sectors, banking and finance, holds well, and the other sectors continue to weaken, like the metals or energy, real estate, then we might have some good shorting opportunities coming up next week. So all in all, I would say the markets are holding well. It is a bullish chart, but we have some initial bearish readings on our ratio charts and our charts. So we'll keep our eyes open. We'll not chase the market on the upside. We'll look for dips, and if those dips give us shorting opportunities, we might short them as well. Most of the opportunities, I think you'll find them from the smaller time frame, and during our live classes I will walk you through these opportunities as they come. Now let's go to the Excel sheet and take a look at our open positions, and let's update the prices, the performance, and let's see what call we should take on them.